It's time to get you primed up for the next week. What's incoming and what do you need to look for inside the crypto market and also the main markets? When we look at the past 24 hours ago, we were here in Bitcoin and we've seen quite a good rally on the news that President-elect Trump has Bitcoin reserve plans that will fuel nation-state adoption. We're also seeing a bit of a sell-off in Bitcoin right at the current time. Now, what happens when we get a sell-off? Well, we know it's just moving towards structural support. What happens when we get a rally? We know it's moving towards structural resistance. Where are these pesky things? Where do they live? Structural support is currently at that 102.084 level, and Bitcoin is currently 102.732. What we need to keep our eyes open for, and I was mentioning this in yesterday's video, as we come up into a positive CTKS gap, we can have upside and downside reactions that can be quite sharp, especially when liquidity enters the market. Right now, the Aussie session is just getting going and people are saying, ooh, juicy time to book some profits in. But we also know that the smart money is going to defend that 102.084 structural support level. Also, something to be very mindful of, that 104.185 level of structure is really strong. I'm not surprised at all that we're seeing a bit of a pullback at the current time, because as new liquidity enters the market, it tends to change market dynamics, so you must be aware of liquidity shocks. I'm going to be talking a lot about that in the Profiting from CTKS Method structure course. In yesterday's video, I said the critical levels to look at were the 102.084 level and the 100.871 level. Right now, the critical level to look at is the 102.084 level. If the bears gain control, they'll seek to push it down and revisit the 100.871 level, and also try to get underneath that to push it down to the 99.934 level. The bulls, on the other hand, will seek, if we get this negative price momentum, to defend above the 102.084 level and to push it up into the 104.185 level. And please note, this is an area of quite substantial structure. One thing to remember with the Ethereum ETF, BlackRock has been on a 16-day Ethereum buying spree. And that's not only inside Ethereum. You can see the spot inflows to the spot Bitcoin ETF have been substantial. With Ethereum, there are so many shorts in ETH at the current time. I think they're going to get a nasty headache sooner or later. If you were an investor or a trader in Ethereum, you could be very perplexed by the behavior of Ethereum's price. And we can see right now that Ethereum is selling down. People are taking profit. But beware, when we look at level 1 and level 2 standard certification, we can see that there are areas of structure inside Ethereum's chart. If Ethereum's price is below a level of structure, that is a structural resistance line. And those structural resistance lines are very important to know the location of. If the price is above a structural level, that structural level is a structural support level. These structural support levels we already know inside market structure. These are the world's most powerful smart money buy and sell level structural indicators. Now, what does it mean? In yesterday's video for Ethereum, I said we needed to keep our eye on that 38.37 structural support level. Structural support simply means the buyers will come in and seek to defend that line. We had that 39.50 structural resistance level, which has played out several times. We know the structure in advance. You already know the support and resistance levels. In other words, you already know where smart money is going to come in and defend the price by buying. And you also know where smart money is going to escape from that chart and sell it down. These structural levels, called CTKS levels or Stanfield levels, have been proven out over many years. They literally give you X-ray vision into the market. You can imagine the trauma if you just use recent indicative price to try to figure out where support and resistance levels were. It doesn't work that way with Level 1 and Level 2 standard certification. We draw up all of price history because we need to take a census, not a sample. Unfortunately, conventional technical analysis does something rather bad statistically. It can literally take less than 1% of price history and say, oh, I know where it's going to next. No, it doesn't. It doesn't work that way, unfortunately. One thing to note, when you get into a CTKS gap, that's a gap between structural resistance and structural support that is quite substantial. When you get into one of these gaps, price volatility to the upside and also to the downside is extreme. This is exactly why you can get sell-offs like this. Price always loves to come back and test structural support levels. And it always likes to explode and test structural resistance levels as well. So if you know where the structure is, you're already ahead of 99% of people who have literally no clue at all. When you're new to price action, it all looks very, very random, but it is not random whatsoever. If we're in an uptrend, we're making a series of highs, higher highs or higher lows, and price always has to come back and retrace for people to take profit and then reassess their positions. Total crypto market cap is a very important chart that you need to keep your eye on. It's created some dramas across the weekend for Bitcoin and of course all of crypto. One thing that you note is there is a lot of upward structural resistance above that $3.6 trillion mark. We are also in a CTKS gap, which means inherent volatility. But we do expect that interaction at that $3.53 trillion mark. If the bulls gain control over the total crypto market, we would expect a rally up to around this 3.58 and then getting through that and attacking the 3.6 trillion. If the bears maintain control, this downward pressure, we could overshoot that 3.53 trillion, underside retest it and make our way down. Please let me know in the comments, who do you think is going to control the crypto market in the next 24 hours? Will it be the bears or will it be the bulls? A couple of news items that could help you out. Ethereum has got record short interest on CME. In fact, there's never been more Ethereum shorts than at the current time. This is despite 130,000 new addresses being created since December and more than 2 billion added in 3 weeks via ETH ETFs. One of the things that you want to keep your eye on with Bitcoin is this 102.084 level. We can see that structure is weakening somewhat because we've got a lot of overhead structural resistance at that 104.185 level. The sellers are in there saying, "Thou shalt not pass." And the bulls are saying, let's see about that. Always know, price is always moving in a wave. All you have to do is to understand where the structure is and you can make a small fortune from that knowledge. It's literally like picking the lotto numbers. You know exactly what the numbers are in the next draw. There's also a fair degree of good news with XRP and its RLUSD stablecoin, which was approved by the New York Department of Financial Services on December the 10th. Some fairly good news inside the Bitcoin ecosystem. Michael Saylor expects Marathon Digital to be the next Bitcoin firm to join the NASDAQ 100, and Bitwise is predicting 200,000 plus for Bitcoin in 2025. Now, that's all fairly good stuff, but what we need to understand is where is structure. Right now, we know that we must keep our eye just on that 102.500 level and especially the 102.084. The crypto market is moved around by the main stock market, and this is something that you must keep your eye on. The federal funds rate will be adjusted by the Fed in the upcoming FOMC meeting, which is happening Australian time Thursday, December the 19th at 6 a.m. That's where the Fed is expected to lower the federal funds rate by 25 basis points. It has currently a 90% probability of doing so, and the first rate cut is expected in Q1 2025. That means that the rates are going to stay higher for longer. That will put upward pressure on the DXY and DXY pairs. Also, all the yields, for example, the 2-year, the 10-year. One thing to note that the flash manufacturing PMI is still in restrictive territory. It's constricting, and it's unfortunately expected to get a little bit worse. The flash services PMI is also expected to decrease. So with decreases in the PMIs, both PMIs for manufacturing and services, this will potentially show up in final GDP quarter-on-quarter figures being lower. But there is a little bit of a ray of sunshine. Retail sales month-on-month and core retail sales month-on-month are both expected to increase. Countering that, we are expected to see an increase in unemployment claims and a decrease in the core PCE price index, a leading measure of inflation. And for those inside the service, please make sure that you look at the monthly video. It will give you an excellent insight into 2025. When we're young, we think life is all about what we get. We think that we need to get stuff in order to make other people think that we're valuable. You are already valuable. The concept of self-mastery creates and sustains wealth is incredibly important. Life is not about what you get, it's about who you become as a human being. One thing just to keep in mind, as price goes up and down, your emotions shouldn't go up and down with it. The market will penalize inner volatility and it will reward inner harmony. This is why keeping calm amidst the storm is incredibly important. And this is also true in life. Life is always going up and down, up and down. It's just life. That's how it works. Every chance you get, seek to reduce the inner volatility that you bring into life. And it's interesting that I say that you bring into life, because everything that is said is interpreted by us. And our interpretations are always unique. The same thing can happen to 10 different people and you can literally have 10 different responses. Just seek a response that minimizes inner volatility and maximizes inner harmony. This is incredibly important for your profitability, but even more so for your happiness. And ultimately, that's what it's all about. Seeking to be the best version of yourself every single day is what is important. Financial markets are a way to make money, but they're also a way to heal. Ken, what are you talking about? Well, inside financial markets, you'll find the wavy nature of price will give you plenty of life pullbacks. But those pullbacks will give you the strength for the next life rally. It's important to know that the universe wants you to succeed. You're really important to this world, and therefore, because you're not in competition and you're not under any scarcity, you can show kindness, integrity, and gratitude every single day. And the reason for that will make you happy. Being dedicated and committed is the key to everything we do in life. What we get out of anything is what we put in. We either win or learn, and there's no cause to ever blame. Why is that? Because if we win, we expect that. But if we don't win, we look for external causes for our problems. Instead, just disregard any external problem and just focus on your learning. How can you empower yourself the next time? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.